Hello, welcome to shahidasays.com. Today I want to show you a tool that we built called the Wealth Builder. Basically, I want to show you how investing consistently and over a long period of time in an index fund could yield you very good returns over a long period of time. So if you're on my website, please go to the menu bar. On your laptop or computer, it'll be on the left side, and go down to Tools and you will see Wealth Builder. Let's click on that. And here we are. This is the Wealth Builder. It is a simple calculator, and I'm going to walk you through how to use it. To use this calculator, first, let's choose a fund to invest in. This calculator currently has 4 choices. The Spider S&P 500, which is something I talk about a lot in most of my blogs. This tracks the US market, the top 500 stocks in NASDAQ. Bse Sensex follows the Indian stock market. Ftse 100 is for the UK. And I've also added a very well-performing ETF called QQQ, and this is also mostly a US tracking ETF. For our purposes, let's choose Spider S&P 500. And below it says this fund was started in 1993. So for our test run, we want to make sure that we make investments after this date. Let's say your parents are so super nice that from the day you were born, they started investing in a fund in your name, and let's say they chose the Spider S&P 500, and I'm just going to assume your birthday was in, you were born in 1996, I don't know, let's choose Valentine's Day on 1996, and on your birthday, every year, so you can choose the frequency of investment. You can either make a one-time investment, yearly or monthly. I'm going to show you all of them. For this particular example, let's just say on your birthday, one time, so when you were born, your parents were super happy and they invested $10,000 in the Spider S&P 500 in your name. Let's see how much that money would be worth today. Today, the $10,000 would be worth $79,000, which is an investment, which is a return of nearly 28.2% on average per year. And you would have a nice almost $80,000 in your pocket at 25. So this is wonderful. However, not every young parent would be able to invest $10,000 in lump sum. Let's say your parents still love you and they decided to instead invest yearly, so I'm choosing yearly, and on your birthday they kept investing $1,000 in this fund for you. In this case, let's see, on overall they would have put away $25,000 and it would be worth $86,000 today, with an annual return of about 10%. Let's see what happens. Let's say your parents are super young and they could only put in, I don't know, let's say $200, and they decided to do it every month. In this case, they would have put away $59,200, and you would have nearly $200,000 by today, and that the annual average return is about 9.6%. So again, what I'm trying to tell you is over a long period of time and consistently, if you invest, even if it is a small amount like $200 a month or even $100 a month, you would have very good savings and great returns. 9.6% on average is very good. Let's see one more example. And again, I want to illustrate to you that crashes happen and you should not worry about crashes as long as you are consistent in your investments. So let's say you started investing in 2007, just before the financial crash. And let's say you started, it was in January, it was your New Year's resolution to become financially independent. And you started investing January 1st, 2007. And you were very good and you did it monthly and you invested $100 every month. Even then, you can see you would have, today, you would have almost $40,000. You would have invested a total of $16,500. And as of September 22nd, which is today, you would have nearly $40,000 in your fund. Again, consistent long-term investing is a great way to build your wealth. Let's do a few more examples quickly. Let's say in the Spider S&P 500 ETF, we start investing from just before the crash, let's say from May 8th, 2007, and we'll do frequency, we'll choose one time, and we'll put $10,000, and let's calculate. Today, we would have nearly $30,000, $29,000 at an annual average ROI of 14.3%. And remember, today is 22nd September. Let's see what happens if we had chosen Bse Sensex, which is the Indian stock market, same date, one time. And in this case, 10,000 will be 10,000 rupees. We would have 13.6% return. Your 10,000 rupees would be worth 28,220 rupees. So the Spider beat Sensex in this period. Let's see, Ftse 100, and let's say it's 10,000 pounds. You would have lost money. So Ftse has been performing very poorly over the last actually several years. The Ftse 100, I think they should reevaluate Ftse 100. Let's see the last one, which is actually phenomenal. You'll like what you see in this one. So this one started in 1999. Again, same date, May 8th, 2007, one time, and $10,000. And today, it would have given you a whopping 40%, almost 41% return annually. Your $10,000 would be worth $64,000 today. So this is an extremely well-performing ETF till date. Of course, past performance is no guarantee for future, but it's I would recommend that you check this fund out. So I hope you've enjoyed the session. What would help me a lot is if you would comment below or let me know if there are other funds you would like to see in this format, or if there's anything else you would like to see. And I will try to build it for you. Thank you again. And as always, Shahida says, don't listen to me, but please hear me out.